Welcome to Aha Math and Science. Well, it's time for a summary of this week's market. So on Friday, as you can see that all the major indices were in the red, and the VIX was up about 4%. But for the whole week, as you can see that everything was red. The major indices all were in the red, and so was the VIX. And what of particular note is that the small caps actually declined about almost like 3%, and which is strongly underperformance compared with the larger caps. So let's take a look at the chart first. So here's a weekly chart of the SP500. As you can see that after 5 green weeks, we just had a red week. So the SP500 declined about 1.5%. This is totally kind of expected, as we point out in last week's video, where we suspect some kind of a small pullback is kind of coming. So we had about 1.5% decline, and this does not really kind of change our target. So for the week now, the SP500 is at 43.48, and we are still kind of a bit far away from our target, which is around 45.40, which is the weekly close level of March 2022. Why is that? Because as you can see that in the VIX chart, which is also the weekly chart, the VIX was also in the red, was down a fraction of percent, but it was still in the red. So it's actually now close at 13.44, which is really the lowest weekly close since January of 2020. So major indices were in the red. VIX was also in the red. So really kind of pointing to that in the coming weeks, probably the market still has upside room left. So that's what the volatility index is telling us. So for the larger caps, you can see that we probably have a few percentage upside room left before a major correction is going to occur. But for the small caps, it's actually as of sort of like the current level, it's still quite weak. In fact, for this past week, as you can see, it declined about like 3%. So you will have a lot of kind of catch up work to do. So first, it has to kind of break to the top of this trading range, and then it will probably get to about the 2100 level, which is really again somewhere around the March 2022 weekly close. So that's our target for the Russell 2000. So if this was kind of true, then you can see that the small caps will really kind of outperform the large caps in the coming weeks. And we think that's going to happen. And this is because as we take a look at the ratio of the Russell 2000 to the SP500, this is a plot we've been talking about for several weeks now. And we noted that we are kind of just at the starting of a new cycle where this ratio eventually get to like 0.6. So this is kind of the initial spikes we had. And now it's going to be a slowly increasing in the coming years, actually. So from March of 2020 to basically the present time, you can see that you can draw this trend line here. So March 18th of 2020, the ratio is lowest at 0.4133. And then on May 31st of this year, the ratio was 0.4186, a little bit higher than this low here. So it just made a high low. Now, just this past week, this ratio dropped back to, again, to a level that is very close to the 0.4186. So now standing at 0.4189. So we suspect it's not at this supporting level. So the small caps will rebound sharply, outperform the larger caps in the coming weeks. So this is a kind of observation we made, and let's see how this will play out in the coming weeks. And we also talk about this chart a lot, which is really look at the bond market, especially the 10-year treasury yield, what that is telling us. We point out these different categories where in normal times, the Russell 2000 and the treasury yield kind of are positively correlated. When one is up, the other one is also up. And then during the bear market, which is January 2022 and October 2022, you have a negative correlation. And then since October 2022, we are kind of now in this positive correlation territory. So as you can see that, we have already kind of like a few peaks here. This is like one up and down, another up and down, and then pretty much the treasury yield is went up, went down, the Russell 2000 follows it. Went up, coming down, Russell 2000 follows it. Now the treasury yield is actually, it's kind of holding very steady at a 3.8% level for a few weeks now. And we draw this kind of trend line here. And then we noted that it is not exactly kind of at this trending line. So if this treasury yield is going to kind of break out to the upside, and then we suspect because this positive correlation, the Russell 2000 will follow suit. So from this chart, we also argue that the Russell 2000 has more upside room. So from multiple aspects, we are looking at that really kind of the same message that is being sent by the market. So, and this actually really kind of like a strength in the 10-year treasury yield, which is basically holding very steady, is also a reflection of the resilience in the economy. So, and basically also really a reflection of, the Federal Reserve will continue to hike rates. But the hiking rates will mostly affect the short-term treasury yield, like the 2-year treasury note. But for the 10-year treasury yield, it's really more kind of reflecting optimism about the economy. And this is also kind of really supported by, you can see the dollar index. So from a low of 101.01 in middle April, now you can see it's start coming in this uptrend. And we actually point out somewhere around this time, late April, we said like the dollar index probably already bottomed and it's gonna start moving up. And indeed, it did. Now, until like end of May, it was almost approaching to a 105 level. And in the next few weeks, it corrected, a little bit of pullback, and get to about a low of 102.07. Now we think the uptrend is going to resume. And this is because you can see, look at the histogram here, the MACD histogram. You can see it's kind of the negative bars that can shrink and then gradually move into the positive side. So very soon we think that the histogram is going to turn positive, and then indicating the dollar index is going to be also moving up. So this is again a reflection of like the resilience in the economy. So the economy is actually pretty strong, in some aspect. Well, obviously certain sectors like the commercial real estate, like some of the manufacturing sectors are still in recession, but the consumers are still spending. So this is a kind of reflection of the strength in the economy. So basically, in summary, we think that the market still has some upside room left. So we do not expect like any strong kind of pullbacks or big corrections anytime soon, before at least the S&P 500 get to the March 2022 high, which is around 45, 40-ish. So and then the Russell 2000 probably is going to have more upside room left. Need to get to like 2100 level. So I hope you have enjoyed this video and found the information presented here interesting. Your support really means a lot to this channel. So please do not forget to click the like button and also to subscribe to our channel if you have not done that. Just kind of a quick heads up. I'll probably give an update about my basically my current perception of the broad market. Actually, the big trend in term for this regarding this bear market, and so please stay tuned. So thanks a lot for watching.